Welcome to Mrs. Moneybags Live. This episode is sponsored by quickequity.ca, getting you to your money fast by providing customized solutions to clients all across Canada. I am your host, Nicole Williams, aka Mrs. Moneybags, and I'm a mortgage agent within Canada, mortgage agent level 2. We go live Monday to Friday. We're keeping you posted on the latest financial developments, market trends, and economic news, helping our viewers make informed decisions about their money. Reminder to do your own research. This show is intended for informational purposes only, and we are happy to have you, and let's get into it. So, how was everyone's evening? We are located in Canada, as you know, the country, in the Greater Toronto area, and it is below, I believe, negative like 13 outside. So it's a really chilly day. And that's not considering the wind chill or anything like that. So I hope you're staying warm and staying bundled in these types of temperatures. And if you are watching us from somewhere sunny, drop some sun emojis in the comments below so that we can all just sit there and pretend that we are on some tropical island with you. Okay, so let's get into the industry headlines and go from here. So here's your summary of mortgage and housing news from across Canada for Wednesday, January the 17th, 2024. So let's get into the headlines. So inflation crept back up in December. We're not out of the woods yet. For the third time since 2022, Canada's headline inflation rate reversed course and trended back upward in December. Headline inflation rose 3.4% last month, Statistics Canada reported today. That's up from the 3.1% growth in November and was expected by economists. StatsCan noted that the increase was largely due to the base effects, which refers to the impact of price movements from 12 months earlier on the current month's CPI. In this case, gas prices in December 2022 fell more than they did in December 2023. Excluding gasoline, headline CPI would have slowed to 3.5% in December from 3.6% in November, StatsCan added. At the same time, the Bank of Canada's preferred measures of core inflation, which strip out food and energy prices, remain elevated and outside of the Bank of Canada's comfort level. CPI median held steady at 3.6%, although November's reading was upwardly revised from 3.4%, while CPI trim rose to 3.7% from 3.5%. The December inflation data make clear that we're not out of the woods. The higher move in most metrics, particularly CPI median and trim, likely wasn't what the bank was hoping for. Bank of Canada to remain cautious at next week's rate decision. Given that both headline and core measures of inflation remain well above the Bank of Canada's desired neutral rate of 2%, economists say the bank will continue to hold a cautious stance in months ahead. The stickiness of recent inflation readings suggest that the last mile or kilometer of the inflation fight may prove to be the most challenging, bringing underlying inflation sustainably back below 3%. This is according to the chief economist with BMO. Mortgage interest rates and rent remain two largest contributions to inflation. Shelter costs continue to be a leading contributor to headline inflation in December at a pace of positive 6% year over year, up from 5.9% in November. Specifically, mortgage interest cost, which has been pushed higher by the Bank of Canada's own rate hikes, remains 29.8% above year-ago levels. Rent prices are also up by 7.4%, unchanged from November. So, what are your thoughts on this? I know Statistics Canada has come out with a lot of recent and new data, and I know a lot of people were hoping for some better numbers when it came on the inflation side. What are your thoughts? Are you surprised to see that we had a bit of a reversal in December when it comes to inflation? Or is this something that you predicted? Drop your comments and your thoughts below. Let's get discussing because I know that a lot of economists were hoping to see that we would continue the trend that we saw in November and the months leading up to that, in the sense of that we would either see a plateau in inflation or some decline. Well, that isn't the case, as we can clearly see. What are your thoughts on that? Just as before we get into the next article, drop your comments and let us know so that we can obviously discuss this even further. What are your thoughts? Are you surprised, or is this something that you anticipated? Let us know in the comments below. So the next article we're going to cover is interest rate shifts will have little impact on rental cost. So we already saw that housing costs was one of the biggest contributories to the slight uptick in inflation in December. So it isn't, surprising that even with predicted mortgage interest rates to start to slowly come down, that it will have small impact on rental costs. But let's get into the article and read. Okay, so again, interest rate shifts will have little impact on rental cost. A report from rentals.ca and Urbanization released on Monday found the average asking price for a rental in December climbed 8.6% year over year to a record $2,178 per month. Additionally, asking prices for a one-bedroom unit climbed 12.7% on an annual basis to $1,932. When you look at the last two periods, rents have grown about 22%. This just speaks to how strong the rental demand is across the country right now. This is obviously much faster than income growth, and it's causing a rental deterioration of rental affordability across the country. While many economists believe rental prices could stabilize once the Bank of Canada brings interest rates down, which is expected later this year, we've been underbuilding rental housing for decades. So there's not going to be a whole lot of change, unfortunately, he said. Lower interest rates may push renters into home ownership, and other measures, such as the cap on foreign students, may help with rental supply. However, he added, the overall impact of the measures will be muted. That should take a little bit of steam out of the market, but still we're expecting to see rent growth in the 5% range for the country, which is bringing things back in line with the 5-year average. There are three factors hurting rental prices in the country: record population growth, soft real estate activity, and a stable economy. Rent hikes seen outside of Toronto and Vancouver, while rent prices saw increases of nearly 10% nationally. Canada's two biggest cities, Toronto and Vancouver, actually saw rent prices decline. Vancouver saw average rents decline by 5.8% in December compared to a month prior, while Toronto's declined by 2.8% in the same timeframe. Meanwhile, cities that saw significant population growth, such as Calgary and Halifax, took the brunt of the rent price hikes. I think this speaks to some resistance in the market to how expensive rents have become, and there's been some outward migration from these big, expensive cities into relatively more affordable markets. What are your thoughts on this? What is very interesting to note is, although the overall country's average has increased in December, two of the major cities saw the actual reversal, and that was Vancouver and the city of Toronto. And again, it's predicted from the author of the article that the reason that there has been a slight decline in maybe those two major cities is that people are moving out of these major cities and looking for more affordable provinces or cities to reside and live in. And this kind of will lend some kind of credence to what they're saying based on the fact that, in example, Calgary and Halifax have both seen an increase in A, population growth, and then B, in their rent prices. What are your thoughts on what's happening in the rental market? And do you agree that the interest rate declines that are predicted over the next year will have little to no impact on the rental economy? What are your thoughts on this? Drop your comments below. Let's discuss. For me, it sounds as though this is exactly where the economy is. Housing costs for everybody is up. And the other thing we must note is that there are some areas, some cities, and some provinces that actually have rental caps. So they can only increase rent by certain percentages per year. So I would be very interested in noting how some cities and municipalities are dealing with that based on some of these caps. What are your thoughts? Drop your comments below. Let's get into a third article. So the Ford government, which the Ford government is the provincial government within Ontario, failed to meet its own housing targets in 2023. So Ford government failed to meet its own housing targets in 2023. The Ford government failed to meet its own housing target in 2023, new figures reveal, putting the province further behind in its goal of building 1.5 million homes by 2031. According to the latest data from the Canada Mortgage and Housing Corporation, CMHC, there were a total of 85,770 housing starts in the province in 2023. The number represented a 7% drop from the 91,885 the year before in 2022. The data shows the government fell short of its goal of 110,000 new housing starts during the calendar year. The number of new home starts, just 78% of that target, raised questions over how the Ford government plans to boost construction numbers in the years ahead. The sluggish 2023 numbers come at the end of a tumultuous year of land use planning in Ontario. The latter half of the year saw the Ford government forced to reverse a number of policy changes that would have opened new land for housing construction. The reversals came after Premier Doug Ford found himself mired in a scandal centered on Ontario's Greenbelt. The scandal has also seen his government become the subject of an RCMP investigation, which, according to the Mounties, is actively looking into allegations associated to the decision from the province of Ontario to open parts of the Greenbelt for development. One developer was forced to cancel a 30,000 unit project on former Greenbelt lands when the province reversed its deeply controversial plan in September. The government also backtracked on expansions to the urban boundaries of Peel, Halton, York, Niagara, Waterloo, Barrie, Hamilton, Ottawa, Guelph, Peterborough, Belleville, and Wellington County, further restricting how much land could be used for development. As recently as November, Ontario's Housing Minister Paul expressed confidence that housing starts remain very, very strong and suggested even the current levels are a result of actions taken by the progressive government. Since 2018, we've brought in housing supply action plans each and every year of our mandate. Because of those positive builds, we have seen housing starts increase to their highest levels in over 15 years. A spokesperson for the government said the housing starts data for 2023 highlights the need to do more to increase the province housing supply. Last fall, we sought feedback from our municipal partners and are working to implement the remaining recommendations based on the feedback as we continue working toward our goal of building 1.5 million homes. The province has achieved 23 of its recommendation, with a further 14 in progress. Ontario also isn't alone in posting slower housing starts in 2023 compared to 2022. Quebec posted a 33% drop in year-over-year housing starts. Alberta saw virtually static numbers, while British Columbia saw 11% increase, largely from multi-residential units. The drop in construction starts can be attributed to economic factors with high interest rates and inflation suppressing demand for new homes in 2023. Volatility is not surprising as we are now starting to see 2023 challenging borrowing conditions and labor shortages in the housing start numbers, and we expect to see continued downward pressure in the coming months. According to the province's progress tracker, 11 municipalities have exceeded the construction targets laid out by Queen's Park. The cities speeding ahead include Belleville, Chatham-Kent, Innisfil, Kingston, Pickering, Sarnia, Sault Ste. Marie, Thunder Bay, Toronto, Welland, Whitchurch, and Stouffville. Another 33 municipalities, including Brampton, Mississauga, Oakville, Kitchener, London, Vaughan, and Ottawa, failed to reach their individual 2023 targets. Municipalities stress, however, that they are only responsible for planning and approval processes, while developers are responsible for acting on construction permits once they've been greenlit. What are your thoughts on the construction starts within the country and the housing targets and what was achieved and what wasn't achieved in 2023? Are you surprised by any of these numbers? Drop your comments below. Let us know what your thoughts are. Are you surprised that a lot of the municipalities weren't able to actually meet their targets? What are your thoughts on that? Okay, so since we've covered those three headlines, let's get into the financial tip of the day. The financial tip of the day is to automate your savings. Whatever you are saving for, whatever goal, whether it be big, medium, or small, automate the savings. That could mean you are saving for retirement. Automate it and take it off of your hands. That means you could be saving for your dream vacation. Automate it, take it out of your hands. Whatever it is you are saving for, whatever your goal is, automate your savings plan. That is our financial tip of the day. Today's Miss Moneybags money affirmation of the day is: my bank account is growing every day. My bank account is growing every day. Let's say that together 3 times. My bank account is growing every day. My bank account is growing every day. My bank account is growing every day. That's all the time we have for today. Thank you for tuning in to Mrs. Moneybags Live. We'll see you again tomorrow.